We're going to talk about this pivotal news surrounding my top 5 stocks to buy currently sitting in my portfolio, being Google, Meta, Microsoft, Amazon, and of course, the GTA 6 trade that is Take-Two Interactive. Now, we are sitting at the edge of a pivotal earnings season. Tomorrow, my eyes are going to be glued on Alphabet and Tesla. We're going to get an idea of capital expenditures, whether those are going up, leveling off, what that means for the chip sector, and obviously that backlog revenue. Is it continuing to grow for these hyperscalers? That's what no one is focusing on. Too worried about earnings going down, spending on build out when they should be looking at revenue growth. And that's what we're going to be paying attention to as the billionaires are. We recently saw Bill Ackman actually sell out of his Google position, citing that he wanted to scale out where he saw the biggest, deepest discounts being in Microsoft, Amazon. He said Google's still a great company. He just thinks those are cheaper. And he literally did what I recently did. If you look at my accounts here, guys, I was mainly just holding Google. And then I kind of divvied up the gains to buy Microsoft, Amazon, Meta, just kind of leveling out my positions because I think all these companies as a basket are going to perform exceptionally well together. I'm going to explain why in this video, but my name is Kyle. I'm documenting my path to financial independence to perhaps one day retire early, only asking you if this interests you to let me know what you think, what I missed, anything in the comment section below. While you're down there, slap that like and subscribe to join me on this journey. So let's talk about Google. That has a very special place in my soul as I'm a full-time YouTuber basically, and Google's the premier entertainment platform. How can you argue it against Netflix and Amazon? So much cyclicality and fighting to keep your attention, spending hundreds of millions of dollars on entertainment. YouTube spends zero, baby. They got people like me, friends, people I've worked with on YouTube for years that I love going back to for nostalgia's sake or just seeing their updates, what they're doing. And I love the ad revenue share. Their business model's premier, but that's one aspect of Google, baby. Google's huge. They got SpaceX, they got self-driving. The ad network is still expanding with AI that they partnered recently with Apple. They are a conglomerate. They are a monopoly, and I love them. I love them so much because they prove to dominate every single time. Look at Waymo here. Recently partnering with Waze to help cities patch their potholes. You keep forgetting all the data they're collecting. They could easily help you municipalities and cities, something Tesla wishes they could do, but Tesla can't get their feet off the ground. And Waymo had no problem recently raising $16 billion. Waymo is on fire. And I'll remind you, the car, remember everyone was complaining how expensive Waymos were to build? Now they're under $100,000, guys. They're like 70, 100K for a new Waymo. They're going to expand this stuff like there's no tomorrow. And meanwhile, Tesla is dying. Like they're dying. They're just terrible. They lie always. Delay. Missed expansion targets yet again. I mean, they were targeting 50% coverage of the US by the end of 2025 into early 2026, guys. They don't even have like 100 robo-taxis currently just sitting at a lot. Like people are excited. Like I'm seeing videos and they're showing just, what, 100 robo-taxis just sitting there doing nothing. And they're like, oh my God, guys, production is building. I'm not trying to make fun of you Tesla guys out there. It's a bubble. I mean, Tesla's a defined bubble pushing the goalpost now with robotics because, you'll remind you, Tesla wouldn't have been anything without self-driving from Elon's own mouth. And here it is, self-driving. Not even possible for your own robo-taxi network at home. Remember that promise? I'm going to flick a switch. My car at home is going to be making me money. None of your cars you bought over the last, since Tesla's existed up till 2024 is going to support a taxi network or hardware. Like you literally need to upgrade your own hardware. It's still level 2. It's absolutely insane that the hardware doesn't support full self-driving. Is kind of laughable to me. So I'm obviously just really applauding Google at a much cheaper valuation and now competing in the chip sector because nobody wants to spend the big dollars on chips, man. Like Nvidia's ripping everyone off. They're like Pablo Escobar. Like they just own this sector and they're tired of it. So this is probably why ASML, the big chip manufacturer, the company that makes the machine that makes the machines, they're crushing it probably because all these companies are buying their own lithography machines right now. So Google plans their new Gemini chip here that's supposed to be way faster than 10 times faster, I think, up to 10 times more efficient than Google's latest custom AI chips, just to kind of support this insane expenditure that's been going on and maybe increase a little bit of margin on their hardware. Microsoft's doing the exact same thing though. They all are. I've talked about this time and time again. This isn't new news. You've seen all these companies announcing. You've got Tranium or whatever it's called for Amazon. Meta's got their own coming out, and they're all probably starting to expand quite dramatically in line with their purchasing of NVIDIA chips. And that's why people are looking at NVIDIA saying man, this is going to get a little sketchy for capital expense. I've talked about this time and time again, guys. We're going to hit a brick wall eventually. Can't be making 80% margins without someone coming for your business, baby. It doesn't even matter if the efficiency isn't equal. You could have 20, 30, 50% less efficiency, but if it costs a 20th as much. It's not too hard to pop two of those together to get the efficiency. I'm just saying, that's look at ASML this year, up 61%. Look at NVIDIA, it's like 9%, right? But all of this in my investment thesis doesn't matter. It all reflects around how quickly they can get access to the backlog revenue. That's the race that's currently going on, and that's why for you to buy a PlayStation almost costs a damn $1,000, let alone to replace any PC at home. It's just insane because Samsung, these companies would rather sell their hard drives and their chips and everything they own to Sam Altman, who's willing to pay 5 times the price than you are because they know they're trying to get access to this. I mean, Google Cloud recently saw 63% annual growth to $460 billion. Azure's at $500 billion. Amazon, $152 billion. Oracle, $500. Oracle's the hated stepsister, as someone described in the comment section. But still at these current levels, probably incredibly cheap, and why you're seeing billionaires like Bill Ackman gobble these things up. And I'm feeling like I should probably rotate some of these positions into my TFSA, and maybe that's what I'll do with my Take-Two gains, perhaps. I'm not really sure if I even get Take-Two gains. We should probably talk about the GTA 6 trade that has been going on and why I think the most important catalyst is August 6th or 7th, I believe, when their earnings drop, and that'll be a defining factor to how this massive trade in my accounts work out. Because I personally believe that the market is misunderstanding exactly how many sales or pre-orders they've done. GTA 6, guys, the only thing we really saw from marketing is them basically seeing PlayStation 5 or PlayStation on the store changed their logo and some of their backgrounds to the GTA 6 theme. And you got to understand, that was brilliant. That was genius marketing, man. Like, they've got 70, 100 million PlayStations that are probably logging into the store every damn month, and they knew that was their target audience, and if they can convert, like many high brand products do convert, 30 to 60%, that was their conversion rate on PlayStation. They easily did 20 or 30 million sales there, let alone Xbox, which I personally ordered on, and I know all my friends ordered on, and I have to see those pre-order numbers because that's the defining factor to how successful this will be. And if they are somewhere between 30 and 50 million in pre-orders, guys, I don't think it's going to take very long for the stock to respond to that. Obviously, there's been some fake leaks around how many sales were done, but the reality is the fact they're not doing marketing right now is a bullish sign to me, which means they probably penetrated enough of the market, and seeing the extra level of greed on the final heist for GTA 5 that you can go play. They've really nerfed purchasing power there and just trying to squeeze every dollar they can, and I think that's to make the best possible quarter in their existence. I think when we look at those net bookings, guys, I think it's going to be disgusting. I think the stock will respond and then probably rally into the release. It's my current bet right now, but unless those numbers come out and are absolutely jaw-dropping, I won't stick around, right? But that's just my take here, and I'll roll the gains over, obviously, maybe into my hyperscalers, back into the S&P. We'll see how I feel about it as time goes on, but these earnings catalysts are going to be massive for these companies that are trading at wicked discounts. I'll remind you here, Microsoft at a 23 PE, Meta at a 23 PE. What do we got? I mean, it's disgusting. It's just disgusting. Like Amazon at 29, you got Google here trading at a friggin' 26 right now. Like, what the hell? Guys, like, these are the growth rates on these are double digits. These are $4 trillion companies growing numbers that were non-imaginable even 10 years ago. And here we sit, man, like people trading these stocks like they're worth less than Pepsi, Costco, Walmart. Like, I'll remind you, consumer staples right now trade for a higher premium than most of these companies do. Like what is Procter and Gamble trading at these days? I mean, yeah, a 21 PE, a company growing at a 7% clip, trades at a similar level to that of Meta that's growing like over 20% or whatever. Like, what's Pepsi? Pepsi's currently trading at a 17. Okay, so Pepsi's looking a little cheaper there. I know it was trading higher before. We got Costco here trading at a 46 times, growing at 11%. The comparables are insane. They're just insane because people don't want to see earnings per share go down, but they're willing to overpay on SpaceX. Like, these idiots will drive SpaceX valuations to the moon, but no. Capital expenditures for AI build out, even with the massive backlog, no, backlog revenue. That's sometime in the future to unlock that revenue. I need earnings now, you greedy mother effers.